Hey Larry, let's get right into it. I wanted to ask you a bit more about your book. I'm really excited about it. We spoke just off camera talking about you're going to be writing a book on gold, on Bitcoin. Can you explain what it's going to be about?
Yeah, sure. First of all, Roger, thanks for having me on your show. It's nice. I think it's the first time we've done a pod together, so I'm happy to do it. I follow you on Twitter. Yeah, so the book is what drove me to write the book is kind of a frustration in the United States, particularly, but worldwide, but obviously I live in the United States. So with all the noise and political angst that's going on, and obviously, look, the what's happened monetarily has caused a huge strain for everybody. And it then causes people to lash out and react and be angry, and rightly so. But also, leads to political division and, blue camp and red camp and all that stuff. And I saw all this and I thought to myself, gosh, what's really annoying here, or annoying to me anyway, and I think Bitcoiners understand this and some gold people understand it, but is that the problem, we have some political problems, don't get me wrong, and both sides have their own issues, but the underlying, if you kind of get to the, if you want to get rid of a swamp, you drain it. You want to kill all the alligators, you drain the swamp. Well, draining the swamp would involve fixing the money system. Because as Lynn has pointed out, the money is broken. I agree with that. The monetary system is broken. The Federal Reserve has broken the monetary system. And I don't think the average American really understands that and really understands why and how we got here. And it was kind of a slow but steady process. I mean, you could argue it started with the founding of the nation, and I go back and I cover some of that history, but it really got going in 1913 with the establishment of the Fed, and then it accelerated through a lot of other events, including Nixon breaking the gold link at 71 and so forth, and prior to that, FDR. But and so I try to explain the history of how we got here. I try and explain, the mind of the Keynesians and why they pushed us down this road and how it's kind of becoming ever worse. And therefore, I think kind of coming to a conclusion, which is kind of what Bitcoiners, I think, all understand, that we're in a fourth turning and the issue is money, and the money is broken, and therefore, if you really want to solve a lot of the problems in the world, the wealth inequality, poverty, wars, just a number of issues, we could start by having a sound monetary unit. Because when we did have a sound monetary unit, things weren't as bad as they are right now, in my view. So that's kind of the thesis of the book, and I'm trying to write it from a first principles, not super high level. It's not going to be a textbook. I mean, I think, Lynn's book is better than mine and Jeff's and Saifedean's, but I don't think the average American will necessarily take the time to read those books. I mean, I want a book that, hopefully I can get it into the airports that, somebody just cruising by will say, huh, this is interesting. Maybe I should listen to what this guy has to say about what's wrong with America right now. And so that's kind of that's and I go through all the history where the bones are buried of, bad Federal Reserve actions and, the quintillionaires and so on and so forth, all the things that many things that are very common to Bitcoiners. Most Bitcoiners know and will understand and relate to everything that's written in this book. But as we all know, we're kind of an unusual small group of people, and there's a big normie world out there that's just kind of watching football and trying to pay the bills, and and they're asking themselves, God, things are getting really expensive. What the hell's happening here? This isn't right, and and it's tragic too, because like take, young people can't buy houses, and I just heard some statistics yesterday about how the fertility rate is down because people don't feel like they can afford to have kids. I mean, good God. I mean, so you're younger than I am, obviously. This is not the country I grew up in. I mean, I grew up I was born in the 50s, grew up in the 60s and 70s, and I'm now 67 years old. And I look backwards and I think, gosh, we've really gone downhill in a big way. And in a lot of ways, we've gone uphill. Look, there's been great technological developments. There've been all kinds of super positive things. And there are going to be more of those going forward. So there's a lot of things to be very optimistic about, one of which is that Bitcoin will fix the monetary system. But until it does, there are a lot of things right now that are really broken. And I think you know that. I know that. Bitcoiners know that. And I want to try to explain to the world why it's broken and why that rather than, sit there and go for your political candidate, both of whom stink in my view. Uh, you should be focusing on the underlying issue, which is let's get the sound money back and let's abolish the Federal Reserve. If we just did that, I think things would get a lot better. So it's kind of a long-winded answer, but I wanted to cover the topic, comprehensively. So
No, that's a great answer. I appreciate how deep you went there because I think there are so many problems that people don't quite realize. I think most people realize that there's something wrong. There's something going on,
Correct.
but they don't know what it is. They don't know whether or
Yes.
not they should complain about the merchants, about the price gouging, if they should talk
Right.
about what the president is doing, if they should talk
Right.
about the Kamala Harris, if they should talk about Donald Trump. Who knows? Both of them are essentially the same. They're two heads of the same serpent, essentially. That
A
that
little
that's
bit, a
that's how
little
I
bit. I
see
mean,
it.
I lean a little bit one way because I
Of
think,
course.
yeah, but yes, I mean, and there's really, the thing that's stunning to me, and I watched the debate, is that there's just no discussion of the fiscal situation that the United States is in, and the book lays this out, pretty clearly that when countries get into this kind of a position where they have 130%, 125% debt to GDP, and they are, running a large deficit in ostensibly a healthy economy. And then they are, going to have to monetize that deficit because there's not enough money in the system to support the deficit. The bond market's not big enough. All of those things, you put them all together. Yeah, look at this. Isn't this amazing? All of
Yeah,
these things, you put them together, and what you see, 124 right now. Yeah.
124%.
Yeah, what you see is that, in developing countries, when this happens, they either collapse, have hyperinflation, or they have very, very high rates of inflation, or they have a depression. So, and none of those things are very pleasant to think about or to contemplate, but I feel like we do have kind of a monetary train bearing down on us. And I think all Bitcoiners, one of the things we try to do is educate other people because we don't want to see them get hurt if and when this occurs. And mathematically, I think enough of us have kind of laid out and you have too on your Twitter site. I mean, we've laid out the math of why this is kind of inevitable. I mean, it's got a Stein's law-like view of it, which in fact that's one of the chapters in the book. And Herbert Stein, as most people know, he was the next administration economic council, president. And he said, if something cannot go on forever, it will end, which is rather simple and kind of so forth. But you cannot grow your level of debt in excess of your level of GDP growth without eventually coming to a crisis point. And eventually could be a long time. I mean, obviously we've done it for 50 years, but things are getting more urgent now, and the problems are getting larger, and the prints are getting larger. Every time we have an accident or financial problem of some sort, we go into what I call the big print. And there's another big print coming. I mean, we know that we haven't seen it yet, but as you know, and I know, the Fed just cut rates by 50 basis points, and they've trimmed their QT activities, and so on and so forth. And so we have reason to believe, yeah, I mean, exactly. This is M2, and for a while they tightened up, and it did go down slightly, but we're back on a growth path. And I mean, another interesting data point most people I'm sure observed is just in the last few weeks, China came out with just enormous stimulus, and so their M2 is growing very rapidly again. So. Yeah, it's a problem, right? And it's going to lead to a lot of change in the monetary sphere, a lot of change. And so, the people who are aware of it and prepare for it and get in front of it, I think are, will be much better positioned to not suffer as much if and when we have this very high inflation, which I think is inevitable.
Yeah,
Oh,
yeah, it's something that I think people are going to. I think most people are going to feel the pain of it before they switch over to. So actually, I heard a great quote from you in another podcast. I've
okay.
been going down the rabbit hole with your
Oh,
content, with
yeah.
your way of thinking.
I
You
said the same
said,
thing over and over,
I
right?
yeah, there was actually one quote that really stood out to me. So you said, given that the game is immoral, the best cards we can play is sound money. I don't know if you remember saying that, but it was
I do
on the
remember
lead.
saying that. Yeah,
It
yeah,
was in the lead lag report
yeah.
10,
It's
12,
true.
13 days ago.
Yeah,
Yeah,
it is an immoral system, and sound money is really the solution to that. I mean, the money printer that's controlled by the Fed and all the central banks around the world is like a wealth machine for the cantillionaires. And they're the people who can borrow. I mean, in the United States, I just discovered this. I didn't realize, the average credit card interest rate in the United States right now is running about 24%. I mean, right? And yet if you're a big bank, you can go and borrow at the Fed funds rate, which is 5. Well, the spread between those two is how much the average person's getting screwed. I mean, And it used to be an even bigger spread because, this is after Powell raising rates to fight the inflation that he created, with all the COVID stimulus and the M2 growth there. And, we used to have 0% interest rates, and that was just an enormous distortion. I mean, ZERP, it was an unbelievable violation of the fundamental principles of what capitalism should look like. And it had the expected result, which is, now I've got the chart in my book. It shows that the top 1% of the country owns 92% of the assets, of the financial assets. It's sick. And that didn't used to be the case. But there's a group of people for whom inflation and money printing is very beneficial because they're smart enough to figure out how to game it. But then there are all the rest of us who are just trying to, go to work, earn a salary, pay your bills, put food on the table, and we don't have the benefits that that group of people have. And so that's very undemocratic, very it violates the founding principles of the United States in many, many ways. And I think, the good news, Raj, I believe, is that more and more people are becoming aware of it. Even people in the mainstream are becoming aware of it. I mean, I was just writing part of the book, and I was referencing a book here called The Lords of Easy Money by Christopher Leonard, which I recommend. He doesn't get it all right, but here's a guy who's an actual Wall Street Journal reporter, New York Times investigative reporter, has written some books, and he's pretty mainstream. I mean, this book is praised by, the Journal, the Times, the Financial Times, etc. So this is a guy who's mainstream, and he doesn't go as far as you or I would. I mean, he talks about Jekyll Island as being, to the delight of all conspiracy theorists, the Fed was formed
He's
in
getting
Jekyll
there.
Island.
He's making his way there. Yeah, yeah.
Yeah, but having said that, he then outlines, and I have this in the book, he outlines the beautiful story of a guy. There was a Fed governor back in 2010 named Thomas Hoenig, who actually dissented against Bernanke's policy of QE. He realized what it would do, and he nailed it. He had it absolutely right. And of course, Bernanke hated him for doing it. And and it lays out Honig's argument, what he did, how Bernanke ignored him, and then what subsequently happened that proved him right. And the point is that here's a book that it was actually critical of the Fed. And if you read the cover blurbs on from the reviews from these major financial publications, they all are like, Leonard has brought out a very interesting point here that should be listened to. And so I think the reason I bring it up is what I think you're seeing is that the world is starting to wake up to what you and I know. I mean, this is just so broken. I mean, it's almost like it couldn't get any worse. I mean, it probably will get worse, sadly, but it's just so broken. I mean, you know, pick an area, point at it, and you can see how broken it is. I don't even know where to start. So I'll,
And
I'll stop there and let you ask the next question.
so
Yeah.
I actually want to just keep going with that. So the problem is, of course, that our money is being stolen from us through
Yes.
inflation, through debasement. It's being taken
Yes.
from us. And so you used to be a gold advocate. You used to love gold.
Right.
I think it
Still
was in
am. Still am. But
2008 that
I've
you oh yeah, there you go. I think it was in 2008 that you said that you started going into
Yeah,
gold.
in
Before that, you were
'08,
into
well,
stocks.
well, yes, I mean, the history of it all is I was really actually an investment manager in technology and venture capital when I was most of my career from kind of the early '80s until the 2000s, early 2000s. And then I kind of moved into just investing my own money and growth at a reasonable price things. And then when the 2008 financial crisis hit, I pivoted very hard because what I saw was what I now is now coming true, which is they're going to debase the currency, print a lot of money, and we're going to we're going to get hurt in that process. And so at the time, I didn't read the white paper. I didn't even know the white paper existed. At the time, the way to protect oneself if you were looking at an inflationary monetary environment was to buy gold and silver and gold and silver mining companies. So I went and I studied those. I had a guy who was very good at it, helped me get smart about those. And I set up a fund focused on investing in those. And I still run that fund. It has some Bitcoin in it, but because most of the people bought it for its gold and silver theme, it's the great majority of it is in gold and silver mining companies. And gold and silver will continue to benefit. Throughout that whole process, though, personally, I started dabbling in Bitcoin, tried to buy some, almost sent some money to Mt. Gox. Kind of glad I didn't. Although now, as it turns out, it actually didn't turn out badly for those people because even the people who sent money there ultimately recovered multiples of what they sent, in the settlement. I started buying Bitcoin in the 2013 timeframe, and was always concerned about the technology and the technology risk associated with it. But as time has gone by, block wars, etc., I got more and more comfortable that this is the real deal. And I was scared that it wasn't the real deal because I was very aware of the prior experiments like DigiCash and eCash, and there were other people, computer-based money had been attempted many times pre the white paper, the Bitcoin white paper. And in every case, there was a piece missing. And Satoshi, to his or her everlasting credit, pulled it all together and got it right. And 15 years of data, this thing works, right? And the technical risk is, in my opinion, now quite low. So, yeah, and I've said many times, and don't make any bones about it, I think Bitcoin will outperform gold massively. It already has. I think it'll continue to, with the cost being the volatility. And so, the gold, I think gold will be a good performer, particularly vis-a-vis fiat, which I think is in the process of failing. And it's more suited to people who, want to have something tangible, want to have something they can physically possess, and want something that can't have, or hasn't historically had drawdowns of 60 to 80%. A big drawdown in gold would be 15 or 20%. So, um, that doesn't mean it's a better choice. It's just a better choice for some people.
So
So yeah, that's my history with it.
so do you think that the way that I see it, maybe I'm looking at this wrong, but I think that gold is valuable because there's really no alternative. Gold is gold. There's
Right.
nothing there's nothing better in the physical world.
Correct.
But because future generations are going to Bitcoin, do you think that they'll still want gold? Because I mean, of course, there's the industrial use. They can
Sure.
maybe hedge. Go ahead, go ahead.
Well, no, it's a great question. I mean, I think, well, look, Bitcoin's going to flip gold, and then ultimately gold is going to probably go down to just its jewelry value. But that's a multi-decade process. That doesn't, you've got 8 billion people with a lot of history with gold who understand that this is a very rare mineral that, has done a good job of functioning as money. And until Bitcoin was really the soundest form of money. So, the stock to flow was the best. It's gonna take time. And with excess funds these days, I don't buy gold anymore. I've got a bunch of gold. I'm gonna hang on to it. It's got value, but I buy Bitcoin because there's a lot more upside, a lot more opportunity in Bitcoin. But I think for Bitcoiners to suggest that gold's just going to disappear overnight isn't a realistic appraisal of how things work. I think they're both going to appreciate massively vis-a-vis fiat in this reset. And I think one reason to continue to own gold is that, in the first step of the reset, there's a good possibility that they'll try and do it with gold rather than Bitcoin. I mean, they should ultimately jump to Bitcoin, or they should initially jump to Bitcoin, and they ultimately will jump to Bitcoin, in my opinion. But the first step of the reset will probably be to try and reset around gold. And you're seeing this in the behavior of all the BRICS countries and the Asian countries, etc. I mean, you know, the word, what's going on, in my opinion, in the markets and the money markets, the currency markets, is the word is out that the U.S. has a serious fiscal problem, fiscal dominance, as Lynn calls it, and that that debasement is nearly a certainty of the dollar on a go-forward basis, given our political structure, and that therefore you need to be in something the government can't print, and you really have financially. I mean, you can be in real estate, but that's illiquid and they can tax it and you can't move it. So in terms of financial assets, you really got three choices. You got Bitcoin, gold, and silver. And they all have merit. They're different, right? But they all have merit. And yeah, I mean, there's no doubt in my mind that Bitcoin will ultimately totally supplant gold and will be the world's reserve currency. The numeraire in which we measure everything. I think we'll measure everything in sats in 50 years. But I won't be around in 50 years, and it's a long time period to get from here to there. So it's we're just kind of watching things unfold. I mean, that's part of the reason why I get very distressed, or it angers me when Bitcoiners knock gold people and gold people knock Bitcoiners, because we're really all fighting the same fight. I mean, we just and in order for in order for sound money to win, we need to drain the fiat money swamp. I mean, the fact that fiat works is what gives the people who run the fiat system their power. And if everybody went out and bought gold, silver, and Bitcoin and just, stopped saving in dollars, if we all converted our stock accounts, and if everyone realized what a good asset these two things are, the fiat system would die. And that would be a very good thing, because then we didn't have, what Jeff Booth described as natural deflation, which is the way we should live, as opposed to, the rat race that we live in now, or the treadmill that we're on, which is just, we've got to continually inflate to prevent things from collapsing. So,
Yeah, I really love what Jeff Booth says about the world being in a natural state of deflation, but then
yes.
everything is pretty much just manipulated by a
Yeah,
small
well,
group of
and
people.
as he points out, how do you run a system? The fiat system is built on monetary credit expansion. That's what drives it. And how do you map that onto an economic system that, given technology, AI, everything else that's going on, is providing relentless deflation? I mean, the two just don't work. I mean, you can't have one setting on top of the other, and that's what we have, and that's why and it's getting worse. I mean, technology, in the sense that technology is becoming relentlessly deflationary, and AI is going to change the world, and robotics can change the world, etc. And yet, on the other side, on the flip of that, we've got a monetary system that's got to continue to grow credit and borrowing and debt, and that, or else it collapses. And that's, so the two don't fit together. They just don't.
So what are your thoughts on the best downstream effects of going to a sound money standard? The way that I see it, it's going to change the entire world. Bitcoin is
Oh, totally. Yeah.
on its own, it's going to just change everything, right? Just because gold, like the way that I see it, we didn't go to a gold standard because it's very difficult to take self-custody. You can't buy small amounts. You can't buy like a
Right.
dollar worth, for example. You can't put a very small amount in your own self cut. You can't go to a gold dealer and buy, let's say, a gram of gold and not pay a massive premium, right? So, what
Yeah.
do you think are the best or the most important downstream effects of going to a
A
sound money
sound money
standard?
standard. Well, the biggest one, the one that I'm rooting for, the one that I think is the most important, is that it will force governments to be more honest about
Mm,
war. The way, I mean, it really, and if you look back from the history of the United States, the founding of the United States, I mean, every single war has been financed via monetary inflation. Every single one of them, 1812, civil, you name it, all the way through, Korea, and the more recent wars. And so that if the government were to come to its citizens and say, we're going to fight this war in the Ukraine or wherever we are, and or Iraq or whatever, Afghanistan. And by the way, you're now going to pay 20% more tax, for us to fight this. Well, the citizens go, what are you, out of your mind? I'm not paying that tax. Why do we need to fight that war? I'm not interested in that. And so, what the biggest effect that I think it would have is that it would rein in statism, and it would rein in war. I mean, Ron Paul said it very well when he said, the century of total war, the 20th century, we had World War I, World War II, a lot of other proxy wars, Vietnam, etc. After that, he said this, that it makes sense that the century of total war is also the century of central banking. I mean, the Fed emerged in 1913. The British central bank existed before that. But the point is that, central banks exist to give the states power, and the states' power is then abused to, go kill other, people in other states. And, I think in general, if you actually look at human beings on an individual level, unless you're a psychopath, there aren't many human beings that want to kill other human beings. I mean, and I love what Muhammad Ali said. Muhammad Ali was drafted, or in the Vietnam War, and he was conscientious objector, and his great line was, I ain't got no quarrel with the Vietnamese. I mean, why are we at war over there? I don't understand it. And a lot of people thought he was un-American at the time, but with hindsight, a lot of people have also come to respect him. And these centralized, I mean, one of the things that's beautiful about what's going on in the world, and I talk about this in the book too, is just the decentralization trend, right? I mean, the combination of the internet, and then add on top of that, decentralized money, decentralized fair money, which is what Bitcoin is. Um, are really going to change the world in ways that we probably can't foresee. I mean, you and I can't foresee. We can't even imagine. I mean, I was involved in the internet thing and invested in '93 and did I have any idea that something like a Facebook was going to when I was investing in that Facebook would exist or that Amazon would exist or that Google would exist? No, I couldn't see it. I mean, when Gutenberg invented the printing press, I mean, most people were illiterate. I mean, people couldn't even read. I mean, the monks could read. The monks were translating stuff with a pen. The printing press suddenly you can make books quickly and suddenly people learn to read. And of course, now we all read everything and the books are ubiquitous. And so the point is here that, we don't know all the second, third, fourth order effects of having sound money. But what we do know is that with the money being broken, you just get a lot of things that just don't make sense. I mean, the U.S. spent $8 trillion in the Middle East. I mean, it was probably about oil, but it's just ridiculous. And, hundreds of thousands of people were killed, and thousands of people on our side were killed or maimed. And for what? Do you know what I mean? I mean, for what? I mean, because our government had the power to do it. And, politically they could, it's popular to say, hey, they're bad guys, we're good guys, let's go kill them. And that's not really the right way to resolve human conflict in my view. So I think that sound money will really go a long way to addressing that. To me, that's probably the most important and most optimistic piece of the Bitcoin movement is the anti-war component of it. But it goes way beyond that. It goes to a level playing field on everything. The common person not getting screwed through inflation. You can actually save. You can actually plan for your retirement. You can actually anticipate future prices that are lower, not higher. You don't have government people who are, taking bribes to promote policies that are not in the best interest of all the people. I mean, all of it. It all gets fixed when the money is not corrupted. And so, but and some people think, well, that's a grandiose view, but I'm like, yeah, let's try it because I think things are much more corrupt and the world is much more broken than it was when we were on a sound money standard. And one of the things I talk about this in the book as well, it's kind of interesting is that, I mean, people really, Bitcoiners too, people really shit on the gold standard. I mean, the mainstream economic profession shits on the gold standard. They're all over it. I mean, they've done a really good job of labeling the gold standard as the reason the depression occurred, which is just completely wrong, but that's what they've done. And, okay, well, if the gold standard was so bad, then how did the United States go from being, 13 ragtag, colonies, that declared they wanted to fight the most powerful empire in the world into, really the leading country in the world in 1946, post World War II, with a lot of industrial power, a lot of military power, a lot of social power, and a lot of things right with it. Admittedly, some things very wrong. There have always been things wrong with this country. I mean, the slavery, the genocide we committed against the American Indians, etc. But the point is that, this was a fabulous country, and that was all on the gold standard, folks. I mean, in 46, I mean, that was peak America in my view, all on the gold standard. And, 71, something changed, right? We got off of that. And, since then, you can almost, and the book does this, you can almost kind of map the decline, in a lot of different areas. Now, it's been somewhat masked because technology has been a super positive force on the other side of the ledger. Do you know what I mean? I mean, the invention of the microprocessor and so forth. And to me, that's what's going to really save us, in my view. Oh, this is interesting. Yeah.
I found this I was just based on what you were talking about there.
Right?
You can map it out. You can actually I was making a video this morning just explaining why the fertility rate is dropping, why the population growth is slowing down, why there's so many problems, and you can map it out and you can see in 1970, 1971 it was at 2.31.
Yeah.
The number of own
Scroll
children,
down
maybe
because
this
I can't see the bottom of the page. What
oh
does it go to after 81?
I'll show you, but this is essentially just people who have their own families, just for my audience, their own kids. So if it drops down below after 1971, based on just the connection that you just made, it never goes higher than that number,
Yeah. Yeah.
1.94. And I think that I think it's going to drop because if you really think
Yeah.
about it, younger children can't not younger children, but let's say my generation. I'm a millennial, Gen
Right.
Z, Gen Alpha. It's becoming harder and harder for them to actually have kids.
Extremely. extremely.
right?
Yeah, no, it's and that's right. And this is, I mean, look, I've mapped life expectancies. I mean, for 50 years, 100 years in the United States, life expectancies were going up. And for the first time ever, or at least ever in modern history, life expectancies have really started going down, recently. And yeah, there are many, many measures of the social decay. I mean, it's, I've got a chart in there on the deaths of despair. I mean, when we entered the World Trade Organization, we shipped all our manufacturing off to China, and we had a fentanyl and opioid problem in the in the industrial Midwest, where a lot of people were suddenly without jobs, didn't know what to do, and so they've succumbed to alcoholism, drugs, and suicide. I mean, there are just a lot of things that are sadly very wrong with our society today. And I trace those things back to the problem being one of unsound money. Um, you know, I mean, and by the way, I mean, it was a war that kicked off the trend to unsound money, right? I mean, so we got involved in the Vietnam War because, the evil Henry Kissinger, had a hard on and loved the military industrial complex and, had a domino theory about, communism spreading. And so he went in with the corrupt South Vietnamese, government and decided to start a war. And Johnson loved it. And the military industrial complex loved it. And we overspent like crazy, and Europe called us on that and said, okay, give us our gold back, and rather than do the honest thing, which would have been to devalue the dollar and let the gold price float higher, the United States said, no, we're not going to do that. We're going to break we're going to break the agreement that we had with you, in Bretton Woods. We're going to hang on to our gold and tough noogies. You can't have your gold. You got dollars now, as Connolly said, it's our currency, but it's your problem. Which, and so, I mean, that kind of behavior is not the kind of behavior that any sensible human being should admire. And there are a lot of things our country has done that no sensible human being should admire. And I love this country. I love the founding principles that the United States was built upon. But rather sadly, we've strayed a long way from those. And unsound money is a big piece of the straying, in my opinion. And so, we want to fix the problem. I mean, there are other problems to fix that don't have to do with unsound money. Don't get me wrong, but if you want to look at one that touches every area of our lives, unsound money is one of them. I mean, Safe's books have done a nice job of doing this. I mean, and the Fiat food book. I mean, it's everywhere. It's in our food
Yeah.
system, it's in our medical system, it's in our education system, it's everything, you know. I
So
mean,
my wife is a nurse. I
yeah,
have this conversation with her constantly. I try to explain to her that this is what I think. This is where I think it's going, and I have a very difficult time explaining to her how Bitcoin would impact, let's say, low income areas in terms of
yes.
healthcare. Do you have any thoughts on that? Maybe this is something I could show her.
Yeah, that's not an area I know a lot about and I've
No,
dug
okay.
into. I mean, I'm sure there are people who have very good views. I mean, I know, the whole healthcare industry, it's large, it's centralized, it's corrupt. I mean, Obamacare was written by the lobbyists. I mean, the United States I know this for a fact, that the United States spends 2x as much per capita as any other developed country. I mean, you compare us to Italy, Norway, whatever. I mean, you look at all the European countries, we're spending twice as much for healthcare. And also, depending upon how you measure it, it's arguable that we're getting worse outcomes. And that's all just because of the grift, so to speak, in the healthcare industry.
And then
And
there's
there is a lot of grift, right?
Oh yeah, of course. I also think that just the tying in with what you said about fiat food, I feel
Yeah,
like a
right.
lot of that is pretty much just pushing people into the healthcare system, right? Where
Well, that's
I,
right.
so I read something about how the hypertension, high blood pressure is a result of people not having enough salt in their
Right.
diet. It's widely believed that that it's because of high salt. And then I don't know how true this is. I don't know. I haven't done the deep dive on this, but essentially, in this video, it was a doctor that was saying it. He said that statins are basically medical grade salt.
Yeah.
So
Yeah,
they tell you that this is the problem, and then they give you the solution by giving you whatever you're told to believe that the problem is, which
right.
to me is very scary. I also think just something that maybe you're more familiar with. I also think that one of the biggest downstream effects for people in America will be that housing will no longer be an investment vehicle. I know the people in America that the reason why I say this is because more and more people's income is going towards rent, towards owning, towards
Right.
mortgages. They're paying something like if you have so I ran the numbers here. If you buy a $625,000 house, you borrow $500,000. You're paying $600,000 in interest to the bank. So the bank
Yeah.
is essentially just spinning up this money out of thin air, and then it's charging you interest, which you have to pay with your time and energy.
Yeah.
What are your thoughts on that?
Well, that's right. I mean, that's the nature of fractional reserve banking. I mean, these guys can create money out of thin air, with no cost of doing so, and it's why banking is a very highly profitable business. The natural corrective to that is that, in deflationary times, those loans would go bad and the banks would go out of business. And that's why they created the Federal Reserve. It was the bankers get out of jail free card, which they've used multiple times over the centuries. And so, yeah, it's a perverse system wherein the I mean, it's really a form of fascism. It's kind of a merger of large government and large corporate interests, and all aimed against quote unquote the people. And the people are just, we're just the tax slaves to be harvested. They tax us, they feed us shitty food, that gets us into their healthcare system. They overcharge us for that. I mean, it's any time you touch something that, I mean, that the government and these large corporations are involved with, you've got trouble. I mean, I've experienced it recently where, the private equity firms have gone around and they've bought up all the veterinarians, and they've also bought up a lot of the dental clinics. And
Wow.
yeah, and and of course, the first thing they do is they start pushing, and they lever them up and they start pushing these guys to get more revenue. And so, I'm just kind of stunned by the change in pricing on, dental procedures or, just taking my dog to the vet and, hey, we got to do this, we got to do that. And what used to cost a couple $100 is now $1,000, and that's, I mean, and so it's just, it's a very, very sad money grab. The United States has become a money grab at every single layer. And that's very sad, very sad.
I so I think just adding on to what you were saying there, I think Bitcoin actually fixes that because instead of, let's say, these vets having to sell out to a VC fund,
Yeah.
instead of having to, because they need the cash infusion, because of course they're not able to make enough money, they have all these financial problems. Instead of having to deal with these VCs that are borrowing money from them, instead of giving them a part of their company, they can just save in Bitcoin and they can use
Well, that's the
that.
thing. That's the thing. I mean, so the way the system is set up, I mean, it's like everybody's on a treadmill and you just have to keep running harder and faster because you know that your monetary unit is getting debased. And, that's the Keynesian dream, obviously, is just growth at any cost. But, growth at any cost, I mean, it's like trying to run a 4-minute mile when you can't do it. I mean, you're going to destroy your body trying to do it. And so, the Keynes was wrong. I mean, and all these guys are wrong, and this debt-based system is wrong. It's got us all on a treadmill. Life was meant to be enjoyed. Life was meant to, people were meant to have leisure, and back in a sound money system, you could have leisure because you knew your money wasn't getting taken from you on a daily basis. And so, when we return to a sound money system, a lot of really good things will return in society. I mean, look, I talk about this in the book as well. The goal of an economic system is efficiency, productivity, and efficiency. What makes human lives better is figuring out how to do more with less. And so, one guy trying to catch fish with a spear is a severe disadvantage to the guy who has a boat with a net, and he's at a severe disadvantage to the guy who has a bigger boat with a bigger net. And so, and all that, but to get from the spear to the bigger boat, you've got to have capital accumulation, you got to have savings, you got to have the accurate pricing of those savings, et cetera. And so, that whole process, and the Keynesians don't see that. All they want is growth. And growth, unlimited growth on a planet with a limited fixed amount of resources, that's a problem. I mean, that's a real issue. So, it's a system that has lasted far too long. And one of my friends in the gold space, a guy named Craig Hemke, he says the end of the great Keynesian experiment is upon us. Prepare accordingly. And he's right. I mean, we've kind of reached the end point of this. It's obvious to everybody. I mean, I got, New York Times reporters writing books about how broken the Fed is. It's not long now. We're gonna transition to a new monetary system here because there is really no choice. There's no other choice.
So I was thinking about just based on what you were saying, I just made a connection to something where
Sure.
in the current you were giving the example about fishing where
Yeah.
you have to delay gratification, you have
Yep.
to invest, you have to build capital.
Yep.
I think what the current financial system does is it gives you the ability to not have to delay gratification, but then it gives you at the same time the ability to delay gratification. Because let's say, for example, if you buy stock, let's give Elon Musk as an example. So Elon Musk owns a ton of Tesla shares.
Sure.
He borrowed against those Tesla shares to buy Twitter.
Right.
So he was able to delay gratification by still owning those Tesla shares, and over time they're going to keep rising in value. And then at the same time, he has the ownership of this massive company, Twitter.
Right.
So
Right.
it gives you the ability to delay gratification at the same time and consume. Do
Right.
you do you feel like this is something that so the way that I see it, I mean, it's kind of skewed the wealth. It's
Well,
created
yeah,
the
once
wealth gap,
again, I mean,
right?
that's yes, for somebody like him, absolutely, because he's got the ability, he owns the financial assets, and he's got the ability to take the mortgage loan against, or the stock loan against the equity that he has. I mean, he's playing a risky game because if Tesla were to, ever fall massively in value, he'd have a margin call. But the point is, yeah, that's right. I mean, that's just one of the many games that the fiat system allows wealthy people to play. And that game's not available for you and me, at least not on that any kind of scale. And we can take out margin loans, but the fact that the money is given to people who have a ton of money, it's like the game of Monopoly. It just becomes a winner takes all, and everybody else is broke. So, and that's very sad because it just doesn't work. It doesn't provide good economic outcomes, and it leads to these deaths of despair as I've talked about, and it also leads to a lot of political dysfunction where you got a lot of people running around the country very, very angry, and rightly so. I mean, rightly so, because they are getting screwed. They can't put their finger on it, but they are getting screwed, and then they might lash out with that anger and at one side or the other side or whatever it might be. I mean, it's not, they're not healthily necessarily trying to figure out what the solution is. They're just angry. And so,
And they just get angrier and angrier and angrier. It just keeps
yeah, right. Well,
boiling
that's,
over.
I
Yeah.
mean, ultimately, you got the French Revolution, right? I mean, you got the torches and the pitchforks, and they're going to storm the Eccles building in DC. I mean, I mean, one of the things I find interesting, look at the political pattern. I mean, really for the last 12 years or so, every election it's been pretty much things turn over. They just, voters say, I'm going to vote the bums out. The other side may be broken too, but whatever, I don't like what you're doing, I'm going to vote for the other side. Um, and that to me, that's just a function of how broken it all really is.
Yeah. I wanted to change the topic a little bit here. I know we're
Sure.
approaching the end here, but I want
Yeah.
to just get your thoughts on what's going to happen over the next 6 months. Do you think, I personally think that Bitcoin's going to very likely explode in price. I think
Yeah.
gold, same thing. What are your thoughts on just
I
everything?
have this. I have
Stocks.
the same view. I mean, we're leading up to a breakout in the Bitcoin price. This flag has gone sideways for a long time. The flag was associated with Jerome Powell tightening from ZIRP to 5 and some odd percent. He's now indicated it's going in the other direction. Generally, they make these decisions slowly, but they don't tend to reverse themselves quickly. My sense is we're going to have much lower interest rates over the next year or two. My sense is the economy is slowing down and that more problems are going to present themselves. And that's going to lead to, probably a complete elimination of QT, maybe even a turning on of QE again. Although they don't want to do it, I think they might be forced into doing it. And I think that, that's what gold smells. I mean, Bitcoin hasn't participated yet. I've said this in other podcasts. I mean, gold tends to be broader, more broadly distributed and move first, and then Bitcoin follows. And so gold, as most people know, is at record highs. We're very close to record highs right now at 2,600 or something, which is pretty substantial because it was at 2070 in March. So we're only 6 months from March, and we're up a big percentage. To me, that's an indicator that the gold market smells the next round of printing, and the next round of printing probably, and gold did this in 2019, by the way, too. And, we don't know what the next round of printing is going to get triggered by, but it's going to get triggered. And probably even before it gets triggered, Bitcoin will be, out of this channel in the 60,000 range, into the 70, 80 range. And I think when it breaks out above that top of the flag that it's in right now, I see it going to 100, maybe 200. I mean, the difference between those two numbers, whether it's 100 or 200, I think has to do with if something breaks and if the Fed, has to lean on their third mandate. Their third mandate, as I say in the book, is financial stability. And there are a lot of areas where there's a lot of leverage still in the system. There are a lot of areas where we could have trouble. I mean, I thought we were going to have one with Silicon Valley Bank in March of 23. And they managed to stuff that back in the can, but something will break in the financial system, and that will give them the excuse and the cover that they need to take interest rates down a lot and to, print more money via QE. And that's going to make gold and Bitcoin go bananas. I mean, gold will go to 5,000 and Bitcoin will go to 250. It's kind of how I see it. But the time window for that, I mean, I think, next 18 months, the big, the big print, and it's the big print that drives them. I think absent the big print, just from between now and next June, we can easily see gold over 3,000 and Bitcoin over 100,000. I mean, I think we're kind of on that trend no matter what. But to turbocharge it, you need kind of the big print. It also somewhat depends on the election. I mean, both sides are going to spend a lot of money, but I think it's pretty obvious that if Harris wins, she's going to spend more money. And, the spending money is what drives the deficits. The deficits are what create trouble in the bond market. Fed has made it very clear they're not going to let the bond market malfunction. I mean, in the fall of 2023, the Fed 10-year went over 5%. And they immediately came out and said, oh, the rate hiking cycle's over. They had 10 speakers in 15 days. And they were able to jawbone it back down below 5% on the 10-year. What that told me was that's a level that they view as critical. They don't want the 10-year interest rate to be over 5% because if it is, things start to break. And by the way, it's interesting to note that since Powell dropped rates here 50 pips, 10-year's gone straight up. Go look at a chart of the 10-year. Yield has gone straight up. So that's interesting, right? So it's coming. And I've said before, I think we'll be over 100,000 by the end of this year. As I say, if Harris wins, people are going to react to that in a very bad way. It's not going to be good for the stock market. And I think they're also going to realize that she is going to print a lot. She's going to spend a lot of money. And that spending, yeah, there's the 10-year.
I'll zoom in a little bit here.
Yeah.
Yeah, it's skyrocketing. Why do you think this is happening? Why do you think the 10-year is going up after they decreased interest rates? Why is that
Well,
taking
some of it's
place?
just a standard, steepening of the yield curve that occurs when the economy slows down. But in theory, and when the economy slows down, you should want to buy long duration bonds, knowing that you're going to go into a recession. I think the reason I think it's occurring is that the people in the bond market are coming to realize that the Fed is trapped, and that in light of that, the bond market really is the sucker at the table. I mean, Luke Gromen coined that phrase. I mean, why anyone would want to buy duration, longer bonds, 10, 20, 30-year bonds in the United States, given the amount of, economic, or I should say fiscal dysfunction that we have, it's just beyond me. I mean, the U.S. government is so bankrupt right now. I mean, who would want to own? I mean, owning their 10-year paper is just like burning money. I mean, because you just know, yeah, okay, so you get your 3, 4% along the way, but in 10 years the dollar's not going to buy as much as it's buying today. It's just not. It's going to get severely debased. because of these deficits. That's the way it always works. So the bond market is your tell. I think that inflation is not gonna stay tame, and it doesn't trust the government to rein in its spending. The only thing that could really make my thesis wrong, and I don't think it's very likely, but it's not a zero probability, is if the government suddenly got very responsible, started cutting expenses, means testing Social Security, stopped sending money overseas, got out of the wars, all of it. If cut the defense budget massively. I mean, if the government did all of those kinds of things, then gold and Bitcoin probably won't do as well, just because the need for, I consider them both to be monetary debasement insurance or protection. And we live in a world of massive monetary debasement. But if that trend were to go the other direction, it wouldn't be favorable for what we're doing. But I don't see any evidence of that. I mean, the perfect example is this most recent debate, right? You had these two people up there. I mean, nobody even asked the question, how are you going to deal with the deficits? What do you think of the federal debt? Does the straight up slope of the interest expense line bother you? Madam President or Madam Vice President or, Mr. Trump. I mean, nobody even asked it. And so my sense is that, like most government things, they'll just avoid it until they're forced to deal with it. Right? And they will, at some point, they will be forced to deal with it. And sadly, it'll be probably in the middle of a crisis. Uh,
So there's one thing that I disagree with a little bit on what you're
sure.
saying, but you said Bitcoin is a just basically a siphon for inflation, right?
I think so. Yeah.
It absorbs all the inflation. Gold, same thing. I think that other countries are seeing past this. I think other
Huh?
countries are seeing it as just a form of money. All right.
I
I
agree.
think so let's say I have a friend in Nigeria. He's saying that
Yes,
Bitcoin adoption is increasing more and more every single day, even though
absolutely.
the US dollar is so much better than the naira. I mean, it's because if they need to pay
It's funny.
somebody,
I've got a page on Nigeria in the book, and I mean the naira's lost 80% of its value in the last 9 years. It's crazy. It's like 1,600 naira per dollar right now.
yeah,
Yeah, I mean it's so yeah. What you're alluding to is kind of the medium of exchange use, and as opposed to the store of values. And yeah, in some third world countries, it's a great medium of exchange because the currency is depreciating so fast that you need it. I mean, the issue there is that the Bitcoin world, we need to improve the quality of layer two and lightning wallets, all that stuff. We need to fix all that and or improve it, I should say, because it works, but it's just not working well enough. Yeah, look at that. Isn't that
it's
something?
lost 90.5% of its value.
There you go. Yeah,
Insane.
right. It is insane. So, look, the bottom line is that um, there are a lot of different reasons for adopting Bitcoin. Some people adopt it because it's a store of value. Some people adopt it for remittances. I mean, I've got a chapter in there on that, and the Alex Gladstein case of how, there are billions and billions of dollars of remittances that are sent from, wealthy countries to poor countries by relatives who are working hard to support their family back home. And 8% of those generally get skimmed off for Western Union or whoever the transfer agent is. And the fact that you can send it for pennies on a Lightning, transfer is just it's stunning. It's a huge advantage. So there are a zillion reasons to use Bitcoin. There are all kinds of great use cases, and it's going to get adopted by different people for different reasons. But make no doubt, make no mistake, it is being adopted. And just because the price is kind of going sideways, and that's because, I mean, there's still a big piece of the U.S. public and the financial world in the U.S. that actually thinks that Powell is going to be able to land the plane softly. Everything's going to be fine. We're going to go back to a deflationary environment. Stocks are going to go higher, blah, blah, blah. I mean, there are a lot of people who believe that. I think that's wrong. I think that mathematically you can see that the odds of that happening are extremely low. But that's what makes markets, right? I mean, I'm glad because I'm still buying Bitcoin. I like these prices compared to where I know it's going to be. I mean, it's just different, right?
I think Bitcoiners are just different in pretty much every way, even based on what you're saying here. Um, Bitcoiners see the price going down and they see it as an advantage, and
Right.
most other investors don't really see it that way. Like I think if the stock market were to drop, let's say the S&P 500 were to drop 90%,
Oh God.
I don't think it would recover.
Yeah, well, it'd be some deep value there because there are some good companies. I mean, yeah, probably the world would end, but assuming the world didn't end, the values that exist at the bottom of one of these deflationary collapses are really quite stunning. I mean,
Hmm.
people were buying, things at 2 times earnings with 8% dividend yields in the
Yeah.
30s. I mean, you
Oh yeah,
know,
you were saying Ford.
yeah, right. I said in another podcast. I mean, it was amazing to me. In the 20s, Ford was growing 40% a year, trading at 4 times earnings with a 7% yield. I mean, I mean, compare that to paying 45 times EBITDA for Nvidia today. I mean, it's just we've got a different set of financial rules. But yeah, look, it's all these pieces are moving all the time, and but I think that the keep your eye on the ball moment is just to recognize that the fiscal situation drives monetary debasement. And unless you see something change in the fiscal situation, you know, debasement is locked in mathematically into the system. And therefore, I mean, and you got choices. I mean, you can put your money in a house, you can put it into a car. Of course, that depreciates, but but anything fixed is, fixed, real, tangible, or intangible in the case of Bitcoin because it's a digital entry, but it's a very secure digital entry. Anything fixed that can't be printed, that's going to, carry your wealth into the future better than a dollar, which will certainly continue to be debased. It's been debased a lot, and it can continue to be debased down to the point at which it's zero. I hope we don't get there. I don't think we're going there, but I think we're going in the debasement direction for sure. So
I think it'll just keep trending to zero and keep trending to zero for a very, very long time because
I think that's
there's,
right.
I think even 50 to 100 years from now, there's still going to be people who want to hold dollars who aren't aware of what's going on around them. And
Maybe. I don't know about
yeah,
50 to 100. I certainly for the
no,
next 10 or 20. I mean,
10 or 20. Okay.
it's a well built up set of payment rails that, would be totally hard to replace. I mean, if we started trying to do all the world's commerce on the Lightning Network today, it wouldn't work.
Hmm.
So, I mean, we need fiat payment rails because they've been in place for years and they're very sophisticated and well developed. But that doesn't mean we need to save in fiat. And,
Yeah.
there are many of us who all our savings are in Bitcoin, or big proofs of our savings are in Bitcoin. And to the degree that we need to pay a fiat bill, well, we'll let a little Bitcoin go and pay the bill.
And I think people they see Bitcoin right now, they say, oh, Lightning's broken. The fees are too high. There's not a great enough layer two. But I mean, over the next 10 years,
It's
it's
going
not
to
like
get better. And
it's not
Lightning's
going to
not
get
broke.
worse.
Lightning's not
Yeah.
broken.
It's
It's
not.
just not fully developed.
Yeah.
And surprisingly, I've been surprised. I mean, the on-chain fees can be too high at certain peak periods, but if you really kind of look at the slow periods, I mean, there's some very slow periods where it's still relatively quite cheap. I mean, I think, 10, 20, 30 years from now, I think doing an on-chain transaction will be very hard to do and very expensive. But it won't necessarily even be that necessary
Yeah.
because people will be opening and closing Lightning channels, and so you'll have your Bitcoin. You won't transact with it on chain, you know. So
Yeah. I also think something to consider is that most people, even today, that I would say that would you consider the base layer to be wire transfers ACH today?
yeah, I think so. That's
Yeah.
the base layer of money movement today. Yeah.
And today, most people have never sent a wire transfer,
Yeah, the Fedwire. Yeah, no, that's
right?
exactly right. Yeah, they don't need to. Between their bank account and a credit card and a checking account, they get everything they need.
Yeah.
They get all the payment rails they need. And it's even better than that because they now have PayPal and Venmo and so on and so forth. I mean, the thing people don't recognize, Alex pointed this out so well in his book, is there are about 4 billion people known. If you include the Chinese and the Indians as having relatively developed societies, there are about 4 billion people in the world that have decent payment rails and decent currencies. I mean, there's still fiat they're debasing, but there are about another, I mean, there are 8 billion people on the planet, according to recent estimates. That means there are 4 billion people that don't, that are in Nigeria with an IRA, or that
Yeah.
are in, Guatemala or in El Salvador. I mean, and some of them just rely on dollars. I mean, the dollar becomes a shadow currency, but the point is that, there's a big piece of the world that's unbanked and that gets ripped off in the monetary sphere, everywhere they turn. And the fact that Bitcoin is, free and not free, but open to anybody on a network and, allows two people to exchange no matter who or what they are without a third party being involved. That's a really big deal, a really big advantage. Um, Now, 15 years in, the penetration is still quite low. It's going to take time. You know.
I think it'll be like any other S curve. Maybe I'm wrong here. I think what's going to happen is over the
I think you're
next
right. I think
few
it is an S
years.
curve. And I mean, the question is, where are we on the Gladstein model? Have we hit
Right.
the 10% point yet? I don't think we have. I think we're still
No.
below it,
Yeah, I think
but
I think during
we're a
this
lot
cycle
further
we
than we
can
were in 2017. I mean, in 2017, the place was empty. I mean, I went to a
absolutely.
Bitcoin show in 2017. There were 50 people. I mean, it was out in Santa Clara. It was amazing. So yeah, I mean, it's look, there are more of us, but we're still very much early adopters. And when they say we're so early, that's absolutely right. And I have very little doubt this asset will be a multi-$100,000 asset, and then ultimately $1 million asset, and then ultimately a multi-million dollar asset. But that, if I subscribe to the power law, it's got some good predictive backwards looking capabilities, and I think those kinds of things probably, take a decade to roll out. But would it surprise me if Bitcoin was a million or more in a decade? Not at all. I kind of expect it.
Yeah,
So,
yeah, that's how I see it too. So I guess we're getting to the end of it here. Any
sure.
last words that you have to say?
No, not really.
Anything?
I just no, I would caution. I would just say to people, make sure you know what you own, why you own it. Don't use leverage because it's dangerous, and don't get shaken out of your position. I talked earlier about something might break. I actually did this on another podcast recently, and I just offered the following warning. If and when we have another liquidity event and something quote unquote breaks, very much like March of 2020 or 2008 or whatever it may, if we have one of those, remember in the beginning, in the early days, everything's going to go down in price. Everyone's going to be scrambling for liquidity. Bitcoin's going down, gold's going down, the stock market's going down, bonds are going down, price, yields are going up, all of it. Everyone is just going to be, it's going to be like liquidity, margin call on the world. Everybody's scrambling. Who's got what? Okay. So, and so, what I would, and that might be easy. Somebody might wake up someday and say, holy shit, the world's falling apart. My $60,000 Bitcoin's at 40,000. Okay. Or 30, right? My view is that's an enormous buying opportunity, and literally give it something between a week and a month, because what if we do have one of these, liquidity events, or, something quote unquote breaking, as I like to say, the Fed and the central banks, I mean, they cannot, they've made it very clear they cannot, will not tolerate deflation of any shape or form. And they are going to come and turn on the money printers so aggressively, just like China did, that, 2 months later, Bitcoin and gold will be at record highs. And this happened to me. I experienced this firsthand in March of 2020. I mean, the COVID thing hit and everything went down. I mean, hard, gold, silver, Bitcoin, stock, all of it. And then Powell came out and said, no, we're going to solve this, well, whatever it takes, QE, ZERP again, blah, blah, blah. And, within months, it all had recovered. And the sound money, those were two of my best years. I mean, 2019, I went up 97%. 2020, I went up 122% in my fund. 1 year, right?
Wow.
So, I mean, yeah. Yeah, but to be fair, in March, I was down 20%. I got hammered, I get hit really hard. 1 month down 20%. So, so I just caution people to be aware of that kind of thing, and to not panic, if we see a liquidity squeeze that causes every asset to go down in value. You've got, if you own Bitcoin, you own gold, you own silver, you've got the right assets. They can't be printed. But we're playing with this, the system as it's constructed, we're playing with, we've got so much inflation, and the alternative to that is massive deflation. And so, this is kind of like the 29 period it reminds me from reading history books. I wasn't there, obviously. It reminds me of the 29 period. I mean, there's just so much froth, and this is such a big bubble, and everything bubble driven by all the free money that existed for so many years, post '08 and then in the COVID era, that when it bursts, it could be really nasty. I mean, we could get one hell of a deflationary impulse here. And I think people in their heads have to be aware of that risk, aware of what it means, and understanding that not to worry, they won't let it really develop. But there could be a very brief period of time where you think to yourself, oh my God, I mean the dials are going nuts here. So I would just offer that caution.
Absolutely. I appreciate your time, Larry. I really
Oh,
do.
thank you, Rosa. I really enjoyed speaking to you. Yeah.
Of course, if I hope we could do more of these conversations.
I'm
I really
happy to
think
do
that,
it. I'm happy to do it. I'm trying to, I've got to kind of limit them. I got to get this damn book done. It's driving me nuts. It's a
oh
lot
yeah,
of work.
W-
And the
uh,
goal is to have it, the goal is to have it done by the end of the year. So, and I'm on target. I really have it written, but when you write something, you write it, you throw it all out there, and then you've got to make it really make sense and put things in the right
yeah,
place and edit it. And I'm in that process now. And I've got a fabulous editor. She's really good. But it's going to take a few more months to kind of get that taken care of. But I hope to meet my deadline, which is year end. So
that's exactly what I was going to ask you. I hope that
yeah,
whenever you do you have a title for it
it
yet?
could slip, I'm going to probably self-publish on Amazon.
Oh, okay.
It'll be just a trade paperback at I don't know, $17 or some reasonable price.
Have
I'll
you
do it.
considered doing it through Safety?
Possibly. I will
Yeah.
talk to Safe before I do. I'll
Oh
also do an
yeah.
audio version of it. The self-publishing route is a good way to get something out there, and then you get picked up by other people once you've done that, and then and also the first time through, people
Right.
will find some errors. I'll correct them, so I'll have the second edition, which will be the errors will be ironed out of it. So,
Yeah.
but yeah, that's kind of the process I'm looking at right now.
Amazing. I'm looking forward to it. I actually do want to read that book. I'm happy that you're gonna have an audiobook, which is definitely gonna be something that I'm
Yeah,
going to be looking into. Appreciate
yeah.
your time, Larry. I really
Thanks
do.
very much. Good to be with you, and see you on Twitter.
Absolutely.
Okay,
Bye for
take
now.
care. Bye bye.